This is an Uncovered Japan company research report on FFRI Security, ticker 3692. FFRI is Japan's pure domestic cybersecurity R&D specialist. It researches core threat detection technology in-house, turns it into software, and serves commercial and government customers. This video explains the business, the evidence behind its rapid growth, and the valuation risks that matter. The opening snapshot is unusually strong. FFRI delivered a 31.4% operating margin and 33.5% return on equity in fiscal 2026, while holding net cash of about 3.3 billion yen. The trade-off is valuation. The shares were priced at roughly 37.6 times forward earnings, so execution is already expected. What customers are buying is not a Japanese sales layer on a foreign security engine. FFRI's researchers analyze vulnerabilities and malware, create their own detection technology, and package it into the FFRI endpoint protection family and related services. For government and critical infrastructure buyers, domestic control of that capability is commercially important. The financial record is the central proof point. From fiscal 2022 to fiscal 2026, revenue rose from 1.78 billion yen to 4.35 billion, a roughly 25% annual compound rate. Operating profit rose from 0.10 billion yen to 1.36 billion, or about 90% annually, as a largely fixed research base was spread over a rapidly expanding top line. The important detail is not simply that sales grew. Operating margin expanded from 5.8% to 31.4% over the same 5 years. The product line carries software-like gross margins of about 87%, while lower-margin government research work has strategic value and helps fund the research pipeline. Customer concentration is the risk to keep in full view. CRC represented 25.5% of fiscal 2026 sales, NEC 15.8%, and the Cabinet Secretariat 11.5%. Together, the top three were roughly 53% of revenue. Those relationships are meaningful and often sticky, but a pullback from any major channel would matter. FFRI has funded this growth without balance sheet stress. Its equity ratio was 64.3%, and it reported net cash of roughly 3.3 billion yen. Return on equity climbed from 6.7% to 33.5%, reflecting the asset-light nature of a business whose key factor is specialized research talent rather than fixed capital. The demand backdrop is unusually favorable. Japan's 2025 Active Cyber Defense Law and the Economic Security K program both reinforce demand for domestically controlled cyber capability. Roughly half of FFRI's sales are tied to government demand. But policy does not solve the operational constraint. The company can only grow as fast as it can hire and retain scarce security engineers. Cash flow supports the earnings story. Fiscal 2026 operating cash flow reached about 1.36 billion yen, and free cash flow about 1.29 billion, helped by low capital intensity. Deferred revenue of roughly 1.18 billion yen also supports working capital, consistent with a subscription model where customers pay ahead. Valuation is where the story becomes two-sided. A 37.6 times forward PE is close to FFRI's own short trading history average of around 40 times, but it is a clear premium to a roughly 21 times peer median and a roughly 26 times sector average. The business quality is real. The question is how much of it is already in the price. The report's author estimates a very wide 3-year range, 2,048 yen in the bear case, 8,321 yen in the base case, and 16,666 yen in the bull case, versus 5,380 yen at the report date. These are scenario estimates, not price targets. The dispersion reflects the key risk. The earnings path and the market multiple can both change sharply. To sum up, FFRI combines a rare domestic research moat, a high-margin subscription core, strong policy support, and a rapidly improving financial profile. The counterweights are customer concentration, scarce talent, AI disruption risk, and a premium valuation. This is a research summary, not an investment recommendation. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.